Hello, it's Monday, the 8th of November, 2010. This is Brian Shannon from alphatrends.net. Let's take a look at these markets here. The S&P 500 holds up very well today. It was down 24 cents, but you can see it had a slight pullback with intraday and did recover mostly. It broke below Friday's low. I think probably sucked some new short sellers in there, squeezed them a little bit, but really a pretty quiet day. At the end of the day, we had still more decliners than advancers, 1,637 decliners. 1,350 advancers, but it was pretty much improving throughout most of the day as the market did kind of hold up here. And really, I think that the most bearish thing that you can say about this market right now is that it's overextended, and overextended is not a reason to sell short. It's a reason to be have your stops tightened up and look for an exit when the market tells you to. However, when you look at action from leaders such as Priceline that just reported earnings after the close here today. This has been a super strong stock since 3 months ago when they reported better than expected earnings, and now you can see that Priceline is up at $410, and just this market seems as though it wants to continue to torment the short sellers as people try to pick tops, but there's no evidence that prices slowed down whatsoever. We're still above a rising 5, 10, 20, 50, 100, 200-day moving average, and typically we're going to see, just look back to April when the market, before it topped out here, that we had seen repeated tests of support. We'd seen the 10 and 20-day moving average cross and then a break of support. Now, you have to be on the defensive and manage risk. That's the name of the game, but you can't sell short just expecting that you're going to find the next precise top. It's going to be, maybe we have something like this happen where we have a big sharp down day. I don't think tomorrow will be that day, though, when we have Priceline earnings being received so well here in the after hours. The Nasdaq continues to be real strong as well. It's holding up in a tight range here, and the Nasdaq looks like maybe it's going to be headed for the 2007 highs and up near 55 bucks. The Russell 2000 has been playing catch up here a little bit lately after it broke out last week, and still looks as though a test of the year highs is very likely near about $74.60, rather $74.60. What was the high here? About 74.66. So we have a strong market. The financials held up. Intraday they sold off a little bit, I think, and probably brought in some short sellers who just want to disbelieve this rally. And for a day trade, maybe there was an opportunity there. But when you look at the rising 5, 10, 20, 50-day moving average, here we have a 5-day, 20, 10, 20-day moving average, and the magnitude of that breakout past the $15, 14.80 to $15 level. If we see a little bit more pullback in here down towards 1510, I think that would be actually very healthy and kind of refresh this market. And so far, you look at today we had a slight down day, and the volume is really drying up compared to the advancing volume that we had seen last week. So that's the sign of a healthy advance, at least so far. If they can continue to hold up, then the path of least resistance is higher. It remains innocent until proven guilty. I think that today's low, because it is Monday, 122 will be kind of what we go for from this point moving forward for the rest of the week. But I think there'll be bigger room for trouble if we start to kind of coming in below about that 121.15 and filling in this gap. Now, you might be a believer or a fan of the phrase that all gaps get filled. I personally don't believe that. I think that there are people, look, this gap didn't get filled, for instance. This gap didn't get filled. And if you look at stocks, eventually over time, maybe 6 months from now, a year from now, during our next bearish phase, they get filled. But again, look at leaders like Priceline. These gaps, when they gap up like this, people look at it and say, oh, I'm going to sell short. I'm looking for it to close the gap. There's breakaway gaps. There's running gaps. There's exhaustion gaps. Read a book about gaps. But not all gaps do get filled, at least not immediately. They take a lot of time, and this market, or they can take a lot of time, rather. This market continues to be innocent until proven guilty, and it just doesn't make sense to be fighting it.